Hello, everyone watching on YouTube, listening on Spotify. It's another episode of NRG Insights. For those that don't know, this is a financial services insights based, sounds super exciting when you put it like that, podcast, which is speaking to influential people across the market, whether that be broking, lending, resi, commercial, or ancillary products that come into our market. So today I've got Greg, who is the MD of Avamore. Thanks for joining me, Greg.
Thanks for having me.
No problem. The contentious issue is I've said Avamore right because I think that everyone says it too. I think they say it different ways in your office.
I'm still not sure which is the right one, so sometimes it's Avamore, sometimes it's Avamore. I should probably check.
So everyone says the same thing. Everyone goes, it's definitely one or the other. But anyway, so tell me about your journey, your kind of financial services journey, Greg, up to the point that got you to MD at Avamore.
Yeah, one or the other, exactly. Yeah, sure. So I actually started in investment banking after university. So I did a small stint in Switzerland, and then I was in London, and then I moved over to private banking again in London, and the big corporate. I realised after three and a half years just wasn't for me. I actually didn't really feel I could really contribute, and anything I did didn't really feel like it mattered. So I sort of stumbled across this specialist finance industry, and I knew someone at a small mezzanine, so a small second charge lender. So I joined them, not knowing what mezzanine meant in 2017, and I was there just until COVID. So 3 years or so, and that was great because it was small. It was only 4 or 5 people, so yeah, gave me exposure to all sides. And
It does make a massive difference, doesn't it? When you join a small business or like a family office where, I say this all the time on the podcast, where you get so much exposure to every different facet of the business because you can't just have one pigeonholed hat on, are you? You're doing a fair bit.
yeah, I mean, you try and stick to your job. It never works like that, especially in lending, where each developer and each deal is certainly has its quirks. So then, so left, as I say, around COVID, just before COVID, so didn't realise COVID was about to happen, and left to set up my own family office, again doing mezzanine second charge lending.
Yeah.
Good and bad timing then with COVID, I guess.
Yeah. It's a tough gig, right? It's bumping straight into COVID.
Yeah, it was tough, but I guess it gave us time to sort of take stock and see exactly where we wanted to sit in the market. And I suppose the first few months of COVID, no one really knew what was going on, so not sure what our appetite would have been like, and therefore potentially letting clients and senior lenders down. So I think in a way it was more fortunate than unfortunate. And then we did second charge lending from, let's say, mid 2020 until the end of 2024. So that's 3.5 years. I split my time, I suppose, into two. That the first half was great, so the market was pretty good, and we were able to write a decent amount of business and sort of use the senior lender relationships that I had, and develop relationships that we had developed. Then Liz Truss and the mini budget, and everything sort of changed in the mezzanine and equity world. And the second half of our time doing it was much more sort of making sure we try and get our money back. And
Giving out was the fun bit, wasn't it?
well, fun and not so fun, but some good stories. But in the second charge world, you're so involved in the deals. I suppose it's more like the equity. So we were standing on sites most days and making sure the right people were getting paid and making sure schemes were getting finished or trying to get finished. So it was difficult, but a great learning experience, because you kind of see the other side of it, and I guess why we take all the security and do all the underwriting, because things can go.
Yeah. Especially if you've done like the boots on the ground bit as well, right? If you've actually gone in and said, this is why we need to do this. This is why we're so thorough.
Exactly. So we ended up doing okay. We managed to recover the vast majority of our monies, which I think was a good result under the circumstances. But our family appetite for that level of risk just diminished, because we felt it was too dependent on outside factors. So
Yeah. It's
depending on what
hard as well,
happens.
isn't it? Right, you get a bit battered. You know, it's tough in that time, and then to go again is relatively tough because, like you say, you don't know what's going to be around the corner.
Yeah, apparently, I looked a lot younger a couple of years ago. I'm not so sure. Yeah, so no, it was tough, but I think, as I say, we felt however well we thought we would underwrite, or however much due diligence you do, a war breaks out or housing market crashes for a reason that is out of your control, and
Yeah,
it's the mezzanine and the equity
get the
that
hit.
lose. I then actually knew Michael and the guys here at Avamore relatively well, and we worked with them on a couple of deals where
I was going to
Tarn.
say, were they a senior lender in some of the
Yeah,
RFPs?
yeah,
So you have that
they were a senior
relationship.
lender.
Yeah.
So we had done a couple of thankfully successful deals together, where they were first charge and we were second charge, but we'd worked quite closely on the intercreditor deed before we did the first deal, and then during the asset management of the loan. So yeah, Avamore was always a place that I thought could be a good fit for me because it's still relatively small, and it's certainly commercial and trying to go places and grow, but at the same time it's not we're not a big institution, and we pride
Yeah.
ourselves on some of this and that more personal touch. Yeah, circumstances worked out well. That there was a couple of people leaving Avamore at the time, so sort of an opportunity opened up, and yeah, I joined in end of March or mid March
Amazing.
even. So
And how's
yeah,
it going?
it's
It's been
busy.
another interesting market, hasn't it? Not been an easy bit yet.
No, I'm still waiting for the easy bit.
It'd be
No, it's been
boring,
good.
wouldn't it?
Yeah. No, it's been good. It's been busy. For me personally, it's been a big shift because the volume that we see in deals that we look at compared to the mezzanine world is chalk and cheese. So
Yeah.
in the mezzanine world, we might look at one deal a month that we want to do. Here, it's five, six
Banging them
deals a
out.
week we want to close. If Michael's listening, it's 10 deals a week. So
Yeah.
so it's yeah,
Is that
it's
like a
very different.
mindset? Was it a mindset shift for you as well? Like because you're so used to being like equally strategic, sorry, but just a lot, like you say, a lot less. You're looking deeper at one deal rather than having to do it a number.
Massive mindset shift, and yes, also in terms of the risk profile. So we can take certain views here because we're at a lower leverage and we're first charge.
Yeah.
That as a second charge you can but probably shouldn't take. So yeah, I would say I'm still adapting to that mindset. I like to think
Yeah.
I've managed to
That's
shift
also
it.
good. At least you're coming from a more risk adverse side than not, right?
I think that's probably the easier way to do it. Yeah, because yeah, you
Yeah, if
know
you
what the
come the
risk
other way,
is.
you can lose money.
You'd be a punchy mezzanine lender for sure if you're on the other way. But no, it's been good that the team's growing again, which is great. And yeah, we certainly got some lofty goals, but yeah, we think we hope they're
So
achievable.
how is it with like team wise? Because you've always had quite a young team there, and you kind of you grow through the ranks. Is that something you kind of want to maintain? Is it? I know obviously Michael's a big believer in it, and how is it to keep that kind of that machine turning of getting those guys in and getting them trained up and that kind of thing?
Yeah, no, absolutely. I think that's definitely our ethos. I think myself and Jacob broke that ethos slightly by coming in, but in general, we certainly, yeah, we
You can't
certainly
really bring in that many MDs through the machine as
no,
good as the
no.
machine is.
No, but we certainly, yeah. I mean, we've got our head of underwriting, our head of transactions. That I think one joined as an intern, one joined as a grad, and they've obviously worked their way, all the way up to management. And yeah, that's certainly with the new hires, which yeah, you're helping us with, Marcus, with your company. We're certainly looking to bring in young people and then train them and mold them and hopefully they can grow. We certainly prefer it that way because we feel that each lender's got different quirks and ways of
Yeah.
thinking. So we'd rather take someone.
It is tricky as well. You are flying the flag for it. I'm not blowing smoke because you're a client. Not everyone on here is, but there's too many people that want the person with 5 years experience in the black book, and whether that's across whether that's origination or servicing, etc. And actually, there's a massive skills gap in the market now where there's just not enough people for the amount of lenders that need that level. So, and there's also not many people that are prepared to do what you're doing and have the kind of the deep pockets and patience, which is all honesty what it takes to grow that kind of machine from the bottom. So it's a
I
tough
mean,
it's a tough one, isn't it?
it can be hard sometimes because you put a lot of effort into the train developing, then obviously, sometimes people move on or think of moving on. But I guess you hope that the faith that you put in them is
How do you keep it? That is the issue. And I'm speaking to a couple of people on this recently, and that is the issue. Is you train people really well, and then people who don't put in perhaps the effort to train, to take people new, can offer slightly more. And it's a constant battle because you can't not do it. Do you know what I mean? So how do you kind of combat it?
It's tough. I don't think there's a right answer. As I say, I think because we're a relatively small and close team, we like to think people actually want to be here and quite enjoy the organised chaos. So yeah, we like to think people won't leave for an extra bit of money. But to be fair, we've been okay. We haven't had too.
Yeah, you don't have a big attrition rate. I always think it's tough. And I was talking to Jordan Razwan was on the other day, and they do it all through graduates. And he said the same thing. He goes, the constant fear of you're the guys that are training people up to kind of to feed the industry, which is great. But at the same time, I think everyone needs to join in. Otherwise, it's a bit of a fruitless task.
Yeah, we don't get a training fee for it, so yeah.
So when you say you've got big plans, Avamore, what are you looking at? What's the market look like for you?
For us, we think in our sort of niche part of the market where we're doing relatively small ticket loans, be them refurb or development loans. We think there's a lot more of that market that we can capture, and as I'm sure where we're investing massively in tech to help us to streamline that process. We think with the tech we can give sort of more consistent and quicker decisions to our.
Can we talk about the tech? Is something that is out there? I know it's being built, and I know you're spending a lot on it, but I didn't know from like the peripheral, if you like, what's happening with it.
Yeah, sure. So the tech really is designed to help us from cradle to grave. So from originating, so once the deal's originated, all the way through to loan being redeemed. We've started to get out there with our brokers, so they can actually now go onto the tech and sort of issue their own indicatives, and soon they'll be able to issue.
So it's not cutting out the brokers at all. It's just another useful tool for them.
Not at all.
Yeah.
To the contrary, it's to help the brokers, so they know they can get indicatives, but on our headed paper, etc. within as soon as they submit it through the tech, and we feel that gives them more reliable and an easy way to do it with their clients. And then of course,
does it still have to be checked by a human? Is it good enough yet that you can go, I trust this implicitly for terms, or is it still something that you have to look at? I'm not, because I love the concept of putting the tech into everything and the AI. It's just, I think there's so many variables with commercial specifically that it's tough to let it run away.
Yeah. I mean, I think for the indicatives, we're pretty comfortable with it now that it ticks enough boxes that we can give pretty reliable indicatives based on the information obviously the broker submitted.
Yeah.
HOTS at the moment, heads of terms at the moment, it gives us a very good steer, and it filters out the, say, 20% we definitely don't want to do and 20% we definitely do want to do.
Yeah.
That middle part, which is, as you said, more niche, and you've got to take more of a subjective view. But of course, we're not looking to replace the human element. But
yet.
Yeah.
I keep saying yet about this AI. I keep saying, do you know what? AI can't go out and shake people's hands like I can yet.
Yeah. One day they will, but hopefully not too soon.
Yeah. So what's, I suppose, what your opinion on that? Because it's on everyone. I went to a seminar the other day and we were all talking about AI. Because personally, I think it's just benefiting us to be able to do the thing we're really good at. But how do you see it shaping us as an industry?
That's exactly it. For us, it just facilitates, enables us to do more. As we said, I don't personally think they've ever replaced the human element and the face-to-face dialogue and relationships, etc. But it certainly streamlines everything, and it just allows lenders to scale, which I think is positive. So I think as long as people realise, well, at least our view, that it's not, as I said, it's not to replace, it's just to enhance. Then I think it's exciting.
It is. So let's go into teams. So your structure-wise, you and Jacob, isn't it? And then you've got the sales director. How does that work? Can I ask? Is that something we can? Because obviously you have to have like decision makers, and visionaries or integrators, whatever it is in the business? How does it work with like two at the top? Have you got very succinct job specs, or is it?
Yeah, I mean, it's a good question. I wondered that before
If
I
I'm allowed
joined.
to ask that, I was just a nosy.
Yeah,
Me
no, no,
being,
that's a good
me
question.
being nosy.
We we we've tried to define sort of what sits within each of us, so that there's not that crossover. Now, naturally, we sit about 60 centimeters from each other, so sort of
Yeah,
naturally there's crossover and we'll veer into each other's space. And
yeah, yeah.
obviously, one's
I
got
liken it
UK,
to
but
two business partners. When
yeah,
you still got to know what one's strength is, and where you fit, because otherwise, like you say, it's more of the, oh, I was leaving that to you.
no, no,
It's
no,
just,
exactly. That's always the risk. But no, we're pretty clear on sort of where we are. So I sort of oversee everything from sort of origination through to where it's credit approved, and then Jacob sort of takes over and sort of make sure those deals actually get completed, and then
yeah.
perhaps more importantly get repaid for our asset management.
Yeah. Oh, okay. So it is fairly well split.
So it's pretty well split. Of course, I would say the main crossover is around where sort of I step back and he steps in around sort of
Yeah.
credit approval and actually executing the deals, because the brokers will have been dealing with myself or Adam, our director of sales, and his team more. So they'll probably continue to deal with us, and then we sort of transfer it over.
Yeah. Yeah.
But
Oh,
yeah, I
nice.
think we've
But it
got it.
works.
It seems to be working okay. So that's positive.
How is it with like culture-wise? Talk to me about the important. We'll talk about the importance of culture, but how is it? You kind of been dropped in at the top, so is it quite a big learning for you as well? Because you'd come from small business. When it comes to kind of what the culture looks like in the business and how you maintain it, has that been a big part of your kind of coming in and learnings?
I think so. Yeah, I think you're right. I think obviously the culture before we were three of us in the office, so it was very different. But we've Jake and I have certainly tried to sort of bring back a bit more of a collaborative culture here. We make sure we do lots of team drinks and team events, and we did a paddle tournament the other week and things like that, which I think is important, because we like the guys to work relatively hard, so we try and celebrate the wins and have some fun as well, which I think's been appreciated. So some of the guys
Yeah.
have told me that that's how it used to be, and I think they're quite happy with that.
Okay, nice. So they already had that kind of the core of it, if you like. It's just kind of picking up, maintaining it, etc.
Yeah, because the core's been here since, I think, since inception, or at least since 2020. So yeah, so the core's always stayed, which is great, and it's just sort of making sure that the new people that come in, including I suppose Jacob and I, just sort of buy into that culture and
And
try and do things together.
and challenges wise, Greg, what would you say the biggest challenge for you is coming from? Well, I mean, you've been in big business before, but you've recently, and then going or corporate to kind of small business to then like medium size. What's been the challenges for you to kind of, like I said, to be dropped in at the top, kind of helicoptered in at the top? What's been the tricky bits
Yeah.
for you?
Tricky for me, I suppose, is in a small business you're kind of used to doing everything yourself. In a slightly bigger business like Avamore, that's not really helpful. Where then you just end up doubling up because someone's already done that
Yeah.
well and then do the work. So it's
Are you good at delegating out of interest? Are you good? Is it part of your?
no,
No.
no, no. I'm trying to get better, but
Yeah.
no, I'm not good at all. So yeah, that's been the challenge for me. But I mean, our more strategic view is we need the team everyone to upskill and
Yeah.
everyone to be more trained, so that we can all move up and ultimately scale.
Do you know, I have the same issue with because it is easier to do stuff yourself. We're small. I mean, we're a very small business, but the non-delegation bit is actually is detriment to other people's careers, isn't it? Because you
Exactly.
kind of stunt it, but at the same time, you can do it. So it's like a quick fix, or actually the coach. It's like being a coach and a manager. The difference is massive, but it's hard
Yeah.
to break that, because you can fix something in a minute.
Yeah, but as you say, that's the short fix, which I'm definitely guilty of. I think a lot of us are, but yeah, we're trying to be a bit more sort of patient and
Yeah,
that longer term
and
view, which
likewise, that's why I'm always interested in that question, because I feel like there's not many people that at that level are really good at giving up stuff, because you know that, especially for something that you can complete in a short space of time. It's delegation is certainly a skill that everyone has to learn.
yeah, but then also you want to still provide a good service to your brokers and your borrowers. So not saying obviously more junior members of the team don't provide good service, but sometimes when they're training or new,
Yeah.
as you say, it's easy to step in because you know you can provide that better service. But yeah, as we say, it's
it doesn't work in the long run, but
No.
it's an interesting one. But so let's just go through, and I think I've talked about this with you guys before, but 240 lenders in the short-term market. I know everyone has their niche as such, but how do you put your head above? And I think you've done fantastically as well. Not just saying that, like for that middle market, if you like, of those 240, but not including those big machines at the top. How do you separate yourself? How do you kind of put your head above the parapet? Because it's tough, right? There's a lot of, you don't want to be fighting over margin all the time. So how do you get yourself out there, and how do you market yourself and just become a serious player in the market?
Yeah, I think that's a fair question. It's hard to find the answer because, as you say, everyone can only lower their prices.
There's only one cheapest, can't there? Can't be
Yeah, and the products are all relatively similar, right? So I think, as I said, for Avamore, the space we're in, greatly reduces that 240 lenders downward.
Yeah.
Our longevity now, and that was what was attractive to me to join. The fact we've been going 10 years, actually got our 10-year birthday party next week,
Nice.
I think gives brokers and borrowers confidence that we can deliver, and we're not going to be too reactive in asset management, and we're viewing it as been for the long term.
I suppose that does make a difference, actually, doesn't it? The fact that you go, look, there's our track record. Like, that's because there's lots of new players all the time.
Yeah, because for example, when we were going back to the mezzanine days, we were very strict on which senior lenders we would sit behind, and it would only be, the lenders that had been around for a long time, like Avamore, because otherwise you just don't know what will happen. And
and they've done their due diligence well. They know what works and what doesn't. So
exactly. And then the other part of it, I guess, the same as all the other lenders say, right? It's the relationships. That's where Adam and his team are great, and building their.
It's really hard, isn't it, with commercial? Because like if it's Doris's mortgage in Resi, you've got to go for the cheapest one because that's what she needs, and it's like an emotional attachment to it. But with commercial, you do go with the guys that, one, you like, and two, that can deliver.
I think it's all about trust and delivering, right? And I think that's what Adam always works with his team on. If we tell a broker we can do something, we need to be able to deliver. And that's where we think with the tech and the system we now have in place, like our decision making is quick but also reliable. Because as you know, the worst thing is then to go back on what you said, and the borrowers.
Yeah. Well, at least you've got tech to blame now.
Yeah, we can blame the tech now, which is fine.
Better
than blaming a human. Yeah, exactly. So
amazing. So that's really useful. That's kind of all I wanted to talk about today. But it's been really helpful. If anyone wants to get hold of you, Greg, if anyone wants to talk about Avamore, anyone wants to discuss, anything, or like even if it's product wise or just you in general, what's the best way to get hold of you? Obviously, all your socials are on ours, but what's the best way to speak to you?
Yeah, so either a LinkedIn message or an email is probably best.
Don't put your phone number on here. A lot of weirdos on Spotify. You have to.
Exactly, but look, it's always good to speak to new people if it's whatever it's regarding, and
Amazing. Thank you very much. I really appreciate your time. I will thank you everyone for watching and listening. It's another episode of NRG Insights. But thank you again, Greg. Appreciate it.
Thanks, Marcus.
Cheers, mate.
Cheers, bye.